presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 29th day of October. 29th of October meaning you've got the 30th, you've got the 31st, and then we're going to see what these monthly candles look like. And because I'm doing a webinar, a very timely webinar, tomorrow night at 5 p.m. till 6:30 p.m. Eastern Time, and nothing seems to have changed over the weekend. I did just I don't even know how many charts I looked at, but it wasn't the point of looking at the charts. It was the time frames. And it seems to me more and more, I've been discussing this almost the entire, maybe every day for the last 2 weeks. It's how these monthly candles are going to close. And then what happens just the very first week of November when we get the midterms. Really important. So let me just go through I'll first just run the numbers. Here we go. The Dow is up only 81 points. It's at 24,771. Do you know that it went over 25,000 today? First time it's done that in a couple of days. But more importantly, it failed right at the 200-period exponential moving average. I'm going to be talking about that in the webinar tonight. How important are the different indicators that we use? Absolute key support today is now at 20. If it gives back all the gains and closes down, that is going to be really upsetting. So what we've done is we've kept our core positions in the shorts. We took just a little bit off the Dow short that we started shorting out, right? We set the short up at the open the day after the all-time high. Using the Chapman wave methodology, many times we've been able to pinpoint exact tops, sometimes exact bottoms. Do I hold it too long? Sometimes yes. Sometimes we have a great profit and we get that profit taken back. In this particular instance, the pattern setting up was such that it was so important that the daily worked, closed below the 9-period moving average, closed below the 14-period moving average, use those Chapman wave Roman candles on the 4th and the 5th of October efficiently, exactly the way they're supposed to work. They did. And I want to stay sure. I don't see any reason for the Dow, no matter what happens, at least for the next week or so, to have a spectacular move, unless there's something happens economically or news-wise. I just don't see that now. I also don't see in the next month us going to an all-time high. So this short position, I'm hoping I have the patience to be able to sit it through and then add on these arch formations that fail. We'll see. Okay, let's keep going. S&P, SPX, and X, here we go. S&P right now, it was up, huge up. It's trading at 26.74. It hit 27.06 this morning. Now at the low of the day, up 16 after being up in the 30s. This is really important. Look at this weekly chart. Look at this uptrend line. Look at the inside Chapman wave inside track. It got into it, closed the inside, and today went above it, and now it's going back in. Not a good sign. Look at that monthly candle, Doji leg E, almost absolutely certain. In fact, I'm going to say this for the certain market. You never say anything as if it's 100%. I'm going to say there is a 100% chance, not a 99.99999. There is a 100% chance that we do not make a new high by Wednesday. That'll be 2940.92. 0.42. Let's see what happens. I don't think so. Okay. Meantime, it has to hold to 26.73. It must hold 26.50 or there's real trouble. And it didn't even hit the 9-period moving average of 27.16. QQQ. The QQQ is now only, it is down 60 cents. It was up huge. It was up in a very nice percentage move, just like it's had previously and then failed. it went from a close on Friday at the 166-ish level, 166.66, having hit 164. Bounces today all the way to 169.86. We try to play this just a short-term trade, small position, wrong. That's all. We're in, we're out. And there are three reasons why I wanted to do it, and I'll explain that in a moment. We'll just give you parameters. 170.50 is really what's needed to say the QQQs can at least have a decent rally to test the 171.32 level of the 200-period moving average. Wow, this is bad. IWM, was that up or down? Oh, that's up. $1.20 had a big spike up, made a leg after the downside. 144.70 on Friday. Today bounces all the way to 150.63, trading right now at 148.62. I don't want to give up short positions that were bought perfectly if there are only bounces here. You treat bounces just as a test to see if there's enough strength to last for a 5-day rally. That's all I'm asking for. Hasn't seen it, yes. Okay, IWM, not good. Below 148.10. I'd say that's just not good. If it went there, that would be not good. All right, gold. Gold was down earlier, still down, minus 3.5. I've got this as a leg E in the GC contract, the continuous contract, leg B in the weekly. A lot of the work that I did over the weekend pertained to the longer-term charts, and I've shown that. I'm going to be doing this in my webinar tomorrow. I'm going to be discussing the implications of this gold-dollar mix-up, kind of a tussle between the two. The dollar's been leading, but gold hasn't broken down. It has pulled back, but it hasn't broken down. Dollar trading right now at 96.51 off the 96.86 high. I've got this as peak C, but UUP, which we are long from April, is trading at 25.71. I've got this as a D. Above the cup formation, I'm going to be talking about cup formations. I'm going to be talking about arch formations. I'm going to be talking about what we should be looking for in the coming weeks in my webinar tomorrow night. I believe that this webinar, time-wise, is very, very important, because if this is a concerted down move based on monthly chart candles, then we're not talking about buying every single dip. We're talking about selling every single rally. That's something we don't know, and we won't know until Wednesday's close. So it's a very important webinar coming up. And of course, you can sign up. You need to be a subscriber. You'll get it for free if it's a money-back guarantee, meaning if you're unhappy, you can get your money back. So basically, it's for free, and you'll learn all the different techniques. You'll be able to look at this webinar, discuss it, ask me questions, etc. Really, I couldn't emphasize how important it is. If you look at the TLT, big clue. Look, the TLT is at 114.68, down 30 cents, stuck in this little rectangle. So far, it hasn't broken to the upside. It hasn't really broken back down under 112s. So the way I'm looking at this is that I think that the market perceives, perhaps correctly, that the Fed is unbudging in its outlook for a raise, for a rate hike in December. So that's why it's not rallying sharply, so that yields come down when the market pulls back. I'll be back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, Basil Chapman, Tiger Technicians Hour. Dow's up 118, S&P's up 17. Just a real quick question about the E-mini. Yes, the E-mini 2-minute chart is attempting a little bit of a bounce again. The technicals are not that great at this moment. It really needs to get above 2683. And then I'd say, okay, now we can rally to the 200-period moving average on the 2-minute to 2687s. But look at this. The 10 minutes made a peak E right there at the high of the day, 2707 round number high. And then what does it do? It comes straight down to the 200-period moving average, goes through it, and is now trying to come back at the 2677 level. And the MACD not very good, and the stochastic is not very good. So it's going to take a little effort to do that. And I was this morning when I started to write my report, my final part of the report, very early on, because I did so much over the weekend to send out, which I always do for my subscribers. The E-mini was actually only up 6, then it was up 11. I thought, okay, that's reasonable. Everything was good. By the time I sent out the newsletter, it rallied to a plus 30 in the futures. I don't like that at all, so I had to change the parameters just as well. A small entry point, and then boom, comes back down again. Just keeps trying to rally every day. So now let's go back to the story. The futures were indicating that within the context of the oversold condition, yeah, I've spoken about the VIX. I gave out the rules. I said anyone who's interested in the Chapman Wave methodology on the rules of the VIX volatility index, send me an email to basilchapman@tfnn.com, and I will send something back to you. I did that. This was like maybe 2 weeks ago, maybe 2 weeks ago. And the reason is that when you're looking at the volatility index, this is just my rule of thumb based on years and years of watching turns at the major turns with the VIX index, is that if the VIX maintains its level above the high teens, but especially in the 20s, under these conditions, and every time there's a reversal, it isn't an intraday reversal where the market tries to rally and then it fails at 9:30 and then it plunges 400 or 500 points and then has a fantastic reversal intraday and then closes positive by about 60 Dow points That to me is a real VIX volatility index turn of significance, meaning it's a low, not necessarily the low it could be, but it's more like an a low that can have legs and move to the upside in price, and the VIX comes down in price. These moves overnight, I just never like them. Occasionally they work, but they work for a little while, and then you come back and you do a retest in the market. Staying up here at 24 in the VIX index, be careful. This is not good news. It means a lot of fund managers and hedge fund managers and generally folks are nervous and they're trying to buy protection. They still don't see an alleviation of that. So that's what I say. Keep it in mind. When the VIX goes back to 18, it's a good sign. And not the greatest, but it's a good sign. But 24, be careful. All right, let's get back to our story, crude oil. Crude oil is, in fact, I'll be talking about the VIX tomorrow night. I'll be going through all these different things that we're looking at. Crude oil is at 67. We had that Fed rally going all the way to 76.90. Pulled back very sharply. Didn't quite touch the 200-period moving average in the daily or the weekly, but it looks to me like the 66s is a target. 65s is a target for a real test. That's going to be a big test. All right, now let's do this. We want to look at EUR, USD, the euro. So the euro, if the euro was very sharply higher, it's at 1.139. If it was at 1437, I'd say, ooh, that's good, especially if it was at 1437. The day's young, it could still happen. But if it was there with gold, not at 1232, but actually at 1238 to 1241, I'd say, hey, watch out. Dollar's going to take a rest. Because look, the dollar, I'll do a lot more work tomorrow night for subscribers. But look, the dollar is going to be very important because it's making this cup formation. It did this Chapman wave stalk leg formation like a demonstration of a technique perfectly, even to the fact when it breaks the body, even though I like the body to be just a little longer in the oval pattern, when it breaks the body to the upside and makes the neck and then makes the beak, my rule of thumb in the Chapman wave stalk leg formation is that when the beak is completed, if it doesn't take out the body low of 93.71 in this particular case, it did not. In this case, it said that when the beak is done, this is the rule of the methodology, there's usually a very sharp rally, and then you're on your own. Well, we had the sharp rally, then it stalled at about 96. Now we're on our own. And on our own means, let me expand this, because the weekly chart has this cup formation. The MACD is okay. It's not great. It's making this M-shaped pattern with a kind of a weak right shoulder. The stochastics improved a lot, but it's way under where it was when it hit 96.99. So I'm looking at this and I'm saying, wonderful. If the dollar, which we've been long since April, goes to 97, it means that the monthly chart has gone to a leg B. And even if it stalls there, just the fact that it's gone to a higher monthly candle as the MACD is improving and the stochastics at 74 and improving is a big deal. It means that the dollar is, in fact, your key currency at this particular time, as it has been since the low that was made back in March. And I thought it might lose that for a moment. Doesn't seem to have lost anything, but the double top formation is absolutely key. I'll be talking about that in detail based on the Chapman wave methodology tomorrow. Boeing, here come the questions. Boeing is, pain. Elizabeth. Remember, who was that guy? He held his hand to his heart and shouted, Elizabeth. Okay, so this is 394.28 was the high, October the 3rd in Boeing. And I said, if it does make a new high, I'd be surprised, but I think it's going to be going down based on everything else. And it made the new high. I was surprised. Well, at that point, I wasn't surprised because we were expecting the leg D, but I certainly was surprised from the arch formation, the way it took off from 370 to go to the high of 394. Now it is kind of a done deal in the daily. The weekly chart has very strong support in this trend line right here at about 342, so 344.72. And a monthly chart is still, the MACD's turned down, but it hasn't crossed negative. Stochastic's turned down, but still at 85%. That's good. So we're watching stocks like Boeing down 14 points right now is a big influence. It's the reason this morning why the Dow was way underperforming the general market. Okay. Next thing, UTX. What is the question? Oh, just UTX is down, is up. But we do not have UTX anymore. We had it from the 119s. Rode it, took profits all the way up. It went to 144, comes back down. We're out. And I'm just watching it to see what happens next, because if it comes back to 118, a full circle down from that long that we took back in May, wow, that's really not good. Look at that monthly chart, leggy. Folks, I know, you can do all the homework you want. Just look at your monthly candles and tell me whether the candles that are forming in some of these major stocks, and I'm going to go through the FANG, a big question about, is FANG done? Is FANG done? Can it make a new high this year of the FANG stocks? I think done is the appropriate word. I'll be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. Dow's up 180, up 84. S&P's up 11. A couple of questions. Good question here about the XAL. Look, the XAL. Why the XAL? The airlines and the transports. Yeah, let's just look at that. Look, the XAL. Big deal. It's up 13 cents right now at 96.21, but look at the lower lows and lower highs. This is exactly, you see the way the MACD, you see the W formation? This is, you see the way the histogram's improving? See the way the stochastic has made higher lows? while the price making lower lows. This should be a positive divergence. This should say the XL, whatever it is you're looking at, it doesn't matter. This should say this particular chart daily should be not at 96.19, it should be over the 14-period moving average of 97.75. No, can't do it, fails. I mean, this is horrible. Look at the weekly chart, horrible arch formation, breaks the left side low in the Chapman wave arch formation, can't close above the left side low, failing. And the monthly chart looks like a beautiful arch formation. If it cannot hold the 93s, the 93s this week, that's just not a good sign. Not a good sign at all. Look, that's the RK Airline Index at 96.21, up 11 cents. Wait a minute, IYT, I looked at this over the weekend. I'm saying to myself, okay, what about monthly charts, which I'm going to talk about in great detail tomorrow? Well, Doji Candle Leg E and the IYT, the iShares Dow Jones Transportation Average Fund, and it goes to a low from 209 just back in September, late September. It goes to 176. That's, I mean, 32. That's huge. All right. So that's the transport. Look at that candle. That is a peak F in the monthly candle of the transportation index. It is a serious blow to the transports. It is talking about economic slowdown. I believe we're already in a recession. I'll be going through that in great detail tomorrow. So by the time everyone recognizes and the economists say we're in a recession, or at least a mini recession, I don't care what you call it, just let's call it a mini recession or a slowdown. Let's call it a mini slowdown. I call it a secular sectors slowdown, because there are some sectors that are still seeing some energy. That's when we're probably going to make a low, and it's going to be very important. All right, that's the IYT. Next question is XLI. Let's do the XLI, and then we get the industrials themselves. That's not like the Dow. That's just pure industrials. That did not, the January high was not surpassed in that big rally back in September. And this is like a one-to-one to the downside. This is not good. And if this candle low of Friday at 68.12, 79 to 68, 11 points, it's about 11% or so, 12%. In what, a month and a half? Not good. If this takes out that low, that's just not a good sign. There has to be a rally to the 72s, the 14-period moving average within 2 weeks, so 3 weeks. Otherwise, this is a real problem. All right, FANG stocks. Let's go. Facebook. Down $1.10 at 144.27. Peak F, I've spoken about this a while back. I said there's a real good chance we're making a hat-trick top in the FANG stocks. The FANG, that's Facebook, makes a high all-time. Didn't I not write that in? Good grief, I thought even on Friday I did that. 218.62 on the 25th of July. 218.62 on the something 5th of July. Let's just put 7.5 and I'll correct it if I'm wrong. I never remember those. On the 25th, not the 5th. I thought I was missing a number there. Little digit goes in, 25th. So 218 down to 144, 74 points on a $218 stock. Now let me see, 74 points from a $218 stock. I would say that it's just lost about a third of its value in stock price, not in actual price, but stock price. That's not a good sign. Even if there's a bounce from the 144s to the 162 weekly 14-period moving average, this is not good. It looks to me like Facebook wants to go to the 137s at some point over the coming weeks. Hat-trick top, daily, weekly, and confirming that the monthly is about to give a sell signal which goes to a sell mode. That's what we're in. Let's go to Apple. Apple a day. Peak, is that the high? Yeah, all-time high, 233.47 on the 3rd of October, same as the Dow, the high, and it plunges down from 233s down to the low just the other day of 213. So that's just not a good sign. Earnings coming out, it just looks to me like Apple's got a problem, that's all. It'll be a surprise to me if it can get to the 240s anytime soon. All right? If it takes out 210 support, not a good sign, not a good sign. 198 is the 9-period moving average monthly support. 187 is the 14-period. Apple, Amazon. Okay, my favorite Amazon, and my favorite only in that it's really a benchmark for the XLF. It's got just XLP. It's got no. For the one of the sectors, and it's Amazon trading right now at 1564, down 78. What happened to the rally early this morning? Took out the 1603 round number low of Friday, trading right now at 1563. Forget about it. This is a hat-trick top. Amazon's got a real problem. Yes, it could go sideways, but a new all-time high this year, I think that's going to be, I don't see what the catalyst is. That's all. Okay, I just don't see how I can get to 2050, but I do see how it could at some point get to 1700s, but that's going to be, it's a big deal. This is a big deal right now. Amazon trading down 4.9%. And Netflix, you know, I signed up for Netflix. I signed up for all these things. We never watch. I can't even find the stuff I like. I don't know why I do that. Can we get out? So Netflix trading down 15 at 284. Makes a peak E, makes an all-time high in July at 423 in the weekly, peak F. Peak E, I'd say this is almost certainly going to be a monthly hat-trick top for this FANG stock as well. Absolutely. If it takes out 270 key support in the next 2 weeks, whoa, that's going to be ugly. It could bounce 337s is possible. Not a good sign. Am I missing one? Of course I am. I'm missing Goog. Alphabet. I don't know anybody who says Alphabet. Alphabet is trading at 1,047. This is the Goog stock, not the L stock. It made a hat-trick top in August of 1273.89, the peak F, peak D in the weekly chart. This is not good. This says to me this time and price. I don't see how the FANG stocks can make all-time highs this year. I think early next year they could start on the big track up, but to do it beforehand would be a little brief. They need time. I mean, they've had 2 years, sometimes 3 years of this just straight-up move. They need time underneath the 14-period moving average to take a breather, rebuild energy, and I think this is occurring right now. Did I answer the question? Yes. FANG stocks, not good. Hey, what about what I'll talk about tomorrow? Remember my cash index, CASH, Cintas, Amazon, SPY, and Home Depot? Ooh, look at Home Depot. Look at Home Depot. Trying to rally today, it's up 243 at 174. Trough G/C in the daily. That hat-trick top in the monthly, it's like the FANG stocks. Needs time. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information
that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So something to watch here, and watch it real closely. It was a toss-up for me whether I should actually venture into this group or not, because a lot has to do with the rates. The XLF is up 0.59, up 2.34%. That sounds like a lot. It's nothing when you're looking at the chart. But what is good is that there's a gap up from a long-legged doji on Friday. 2502 was the low. This is the XLF, the S&P Selects Financial Spider Fund, trading at 2587, up 61. And it's just touched the 9-period moving average, and it's not backing away a little bit. So out of the 3 choices I had, I didn't go for this one. I actually wanted to go for a particular stock within this group, and I looked at it and I thought, I need to let it actually move rather than to anticipate. And it was exactly the wrong thing. This is the one that I should have actually moved on. And the others I should have watched and not anticipated. And I'll tell you why. Because my assessment over the weekend about rates remains the same, that that the market, whether it happens or not, we don't know, but the market is perceiving that the Fed is going to raise rates. The data they're looking at is still strong data, so they're going to probably raise rates. And that has been the rule to really help the XLF, but it hasn't been the rule all the way from 2907 down to 2502. So I got a little confused there, because I'm saying that's kind of what's supposed to happen, but it hasn't happened. So maybe this is just another piece of the puzzle that says to me, rates are a big issue here, and don't rule it out. You just cannot rule out that at some point, because the market pulling back like this should have seen bond yields pull back. This is the normal thing as money flows from the insecurity of equities into the security of bonds, the fixed income area. So yeah, let's just keep looking at that. Meantime, this is good action. A couple of things I want to look at. Look, the FXI. Now, on my in my webinar, I will talk politics, but I'll talk it, as always, talk politics to issues, not politics to politics. I couldn't care who you vote for. But I do care about what's going on. And my assessment here is that the FXI, which is the China, it's the China iShares large cap ETF, trading at 38.79, down 19 cents, holding the 38s, struggling but holding. My perception is that the Chinese have locked in on the modus operandi of our president. Their interpretation, I am almost 100% sure, is different to ours. Now, I don't know what ours is because everybody has a different opinion, but I'm saying to the general consensus that China is kind of watching the United States. They don't know what's going to happen, and they're holding back doing anything because they are a huge economic power. We are so dependent on China, just like they're dependent on us. It's probably equal footing in terms of market action and reaction. Here's the issue. My suspicion is that if the Chinese interpret next Tuesday's midterm election, because I suspect they've already started to say, aha, there are certain weaknesses here in the presidency. I'm not talking about the president, I'm talking about the presidency, that are, they could be worked to our advantage, that's China's advantage. If we hold off, let's not do anything just yet. Let's stall as long as we can before we do anything. We're down 30% or whatever it is. Another couple of percent makes no difference at all because we're in for the long term. Let's see how this president comes out on Wednesday, the 6th. Is that the 6th of November? And then we can start dealing with things. That's why this election is going to be really important. And as it stands right now, the market is saying that there are so many issues that are hovering as very important, not just one, not just two, but perhaps 4 or 5. You can go tariffs, taxes, just technology. I mean, the whole thing about technology, you can just enumerate all of these things. So I don't see any reason to expect that the market at this point beforehand, it's going to be a little bit like the futures, you know, when the futures are waiting for the Fed to announce at 2 o'clock. If they are sharply higher at 1:30 or sharply low at 1:30, they'll try to come back to about as close to even because they just want to start afresh when the Fed makes its statement. I wouldn't be surprised if we're looking at something like that right now. So I see the upside as being limited. Wednesday, there could be a whopper of a move one way or the other. All right, here we go. So I spoke about the FXI. There was also a question. AMG, I don't think I've done any. Is that a mortgage company? Affiliated Managers Group. I don't know what they are, but this is really ugly. Do you say what it is? AMG is Asset Manager, yeah. 52-week low. Oh, okay, 52-week low, yeah. A, B, C, a peak D in the monthly chart at about 218, trading at 113. Yeah, 50 points, a little bit of a 50-point pullback on a $218 stock. I would say that that's pretty much a 25% decline. All right, so now here we go. I'm starting to prepare for tomorrow. Question of the Dan Basil, the coda phase interrupters are not going to come. So the question is this final phase of the coda section that I'm talking about, and this coda phase final section, I don't know how long it could last for, but it's where, I don't want to go into it now, I'll talk about it later on, but let me just say that it would be where we start to see the brokerage stocks flying to all-time highs. People are just talking about the stock market this and the stock market that. I think that has to wait. And I don't mind waiting. I think it's a very important hiatus for this last third. And I don't know how long the third will be in time, but a third in terms of climactic move to all-time highs. Yeah, it's coming. I still believe it's coming. That's my belief. But that doesn't mean to say that on the shorter term, as I've said before to subscribers, raise cash and try to keep core positions. That's fine. Be prepared that they're going to come down. They could come down, but have cash ready. There are going to be some fantastic bargains coming up over the coming weeks. All right. So one more question is about the cloud CRM. CRM, what was the question? Yeah, just generally, what is CRM, which is Salesforce.com. There's a guy who really has the gift of the gab, whatever his name is, I always forget his name. 161.08 high in September, 161.19. It's a Chapman wave 2-bar reversal potential if there's a sharp down close this month and no new high next month. and that's his Salesforce trading at 136.67, up 15 cents. This is the first real problem it's had since it took off back in 2016. What a candle. Tell me, just look at these candles here in the weekly and the monthly. Do you think this can be repaired by December? History says this kind of candle needs time. Maybe by February, but I don't think December. I'll be right back. Basil Chapman, Dow's up 95, S&P's up 17.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. We've got John in Miami, Florida. John, how are you?
Good, Basil. How are you?
I'm very well, thank you. You would like to look at
The U.S. dollar, and maybe you can compare it to the Russian ruble.
compared to what?
The Russian ruble.
I don't do the Russian ruble. You got a symbol for that?
It's okay. Let's just look at the dollar. It might be RUB USD.
Let me just see if I can actually pick that up here. Index, funds, futures, ruble. Here we go. No, I don't get. You know what? Overnight, I will try to find it. So, give me your question.
Yeah. So, do you think the dollar keeps going up from here, or takes a pullback?
So let me just talk to the issue of the dollar right now. So the dollar MACD in the daily is very strong. The stochastic's at 87%, very strong. The weekly chart is good. I would have preferred it if the MACD was better, but the stochastic is rallying. So I'm going to make it real simple. If the dollar can break into the 96.87 area, it starts a leg D. If preferably it can go to 97 anytime this week, doesn't have to close it, just has to go to 97. That's very positive for the monthly chart. And then we might see some kind of a consolidation. Maybe gold has a bounce, I don't know. But whatever I'm looking at, so far the dollar is so strong, I think all the currencies are going to be weak against the dollar. I don't know if that answers your question.
Yes, thank you so much.
Thank you very much for calling. So, folks, this is what I'm going to be talking about. In my CD, Introducing the Chapman Wave Methodology, I'm going to be using this quite a bit tomorrow in my webinar, because these are the patterns. Look, we were just talking about this U-shaped double top pattern. So if you go to chapter 17 right here, says, oops, no, not 17, it was chapter 15. I'm sorry, chapter 15, cup symmetry. You'll see that we're looking at the same thing. I'm going to be talking about the relationship of these patterns, what we're looking at, why this is a period fraught with anxiety. Be careful out there. We remain short. Our little quick buys this morning, just a kind of trading experiment. Look at the semiconductors. Pulling back again. Not a good sign. Hey, Jude, here comes Steve Rhodes.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.